Hey everybody, welcome back, and we also got to welcome back tariffs because they're back. So what we got today is that the Federal Appeals Court has agreed to let the government keep collecting import taxes from Trump's tariffs. Now, what this does is it extends the court hearing to July 31st, just giving them some more time. And where does this actually put us? Well, I'd say to an extent it puts Trump in a spot again to negotiate. He came out and said a federal appeals court has just ruled that the United States can use tariffs to protect itself against other countries, a great and important win for the US. Now, this just puts us back to the reciprocal tariffs that have had that 90-day reduction. Remember, they kind of walked them back for a little bit. So we're back to that 10% baseline on pretty much every country. There are some exceptions like China, which we'll talk about here in a sec. But I just wanted to note that duties in April and May came in at 37.8 billion in revenue, so quite a chunk. Scott Bessent came out and said that he's working on a possible negotiation extension on July 9th. That's when that 90-day reduction reduction was supposed to end, but for countries who are negotiating in good faith, they'll get that extension, is kind of how he put it. And that they're also working on trading deals for the 18 most important trading partners. So we're excited to see how all of that comes. Now, we also got some more news. So if we scroll up just a little bit, Trump went on and said, our deal with China is done subject to final approval with President Xi and me. Full magnets and any necessary rare earths will be supplied up front by China. Likewise, we will provide to China what was agreed to, including Chinese students using our colleges and universities, which has always been good with me, he says. We are getting a total of 55% tariffs. China is getting 10%. Relationship is excellent. Thank you for your attention to this matter. And then he also noted again, adding to the China readout, President Xi and I are going to work closely together to open up China to American trade. This would be a great win for both countries. Now, all of this is really interesting, and I kind of wanted to unpack it together. So, the trade deal is done, in my opinion, is clickbait. We're still waiting on the final approval from both country leaders. They say it seems like Trump's pretty much vocalized his support for the trade deal that they did agree to, which was pretty much putting them back to their prior truce trade agreements they were at before they both violated their trade agreements. But Besant described the talks as successful. So it looks like we're going to have this 55% on Chinese goods imported to the US. That's that 20% on fentanyl, 10% reciprocal, and then the 25% for tariffs already in place. So those will be on goods into the US. So what the US imports from China. From China, what they import from the US is 10%. So, well, no, yeah. So pretty much what we sell to China gets a 10% tariff. US will get magnets and rare earth metals from China, which they noted is only for a 6-month limit while they negotiate. And in return, Chinese students are allowed to use the colleges and universities, and they'll get jet engines and ethane for which is real important in plastic manufacturing. Now, what this looks like to me, and it doesn't mention chips, we'll just note that, any AI related chips. Now, this is still all subject to final approval, and it could still be a no. In my opinion, like, Scott Bessent came out and was like, real nicely, was chatty with the guys and super nice, shook their hands and really made them feel warm. And he's kind of like sliding over this paper while they're all like grinning at each other. Hey, like, how about we just start here? I know y'all probably don't like it. I promise we'll work on it for you. And then like behind their heads and their backs, they're like, please, just accept it. But tariffs are now back in play, and the tariffs are what cause inflation. And we got CPI out today, which measures inflation. And what we've seen is that CPI came in at 2.4% year over year in May, right at expectations, up from 2.3% in April. Now, while this was right at expectations, overall CPI kind of came in soft. So core CPI came in unmoved at 2.8%, a bit softer than expected. We expected 2.9%. The consumer price index also came in below expectations, coming in at 1.1% month over month. And there were some talks about this. Wall Street pretty much believes that although tariffs aren't necessarily showing up in this specific report, that's just yet. But eventually these tariffs will start showing up. So companies will then either go from two different ways, right? Or a mixture of the two. They'll either have to raise costs or they'll have to absorb the costs, and that will impact earnings. Now, a popular idea pointed out that demand isn't very strong right now to even justify them raising costs anyways, so that'll just further dampen demand for some of these companies, and that could also impact earnings. So I just thought that was a interesting one to point out, just the fact that maybe that's why we didn't see it in this report, because that was back when consumers and businesses really had low sentiment, even though businesses piled up on a ton of inventory and try to front run the tariffs. It was already kind of looking iffy in the future back in the past when all of this spending was going on, which this CPI report shows the prices increased. Now, let's see what Trump said about that. CPI just out, great numbers. Fed should lower 1 full point, would pay much less interest on debt coming due. So important. So he's talking about government debt, and that's a whopper burger right there. And then we also got JD Vance on Twitter going out and talking. So he shared both the federal appeals court thing from Trump, and pretty much Trump doesn't use Twitter, so maybe JD Vance is just kind of his extension over there, I guess. So here's the post I wanted to point out. The president has been saying this for a while, but it's even more clear. The refusal by the Fed to cut rates is monetary malpractice. And he's sharing the CPI release. Just more drama, right? So yeah, tariffs are back in play until the end of July. So Trump really just gets back to where he was as the 90-day pause ends next month, and they may extend some of these and just kick the can back down the road. And does that just come down to the taco trade? Like they'll just keep on kicking the can down the road and extending stuff and reducing stuff temporarily is how they put it. But let's see how the market's prediction as to whether the Fed cuts rates or not has moved based on both Trump and JD Vance's tweets and truths today. So right here, what we see is for July 18th, still 99.8. Not much movement here, but I thought this one was interesting for July 30th. Still oh wow, I literally just looked at this like right before shooting this video. So it's moved a little bit. There was a 0.1% chance that there was a hike on the table. Now 80.5 on just staying the same. 19.1, so this one's went up a little bit on a quarter cut. And then wow, this wasn't here earlier. So half a point cut up to 0.4%. This didn't show up at all previously. Now, September 17th, we keep saying this is the meeting to watch. The odds of a cut of a quarter went up to 57. We were looking at this yesterday, and this was like 52% yesterday. So I'm imagining the softer CPI, like this wasn't like, oh my gosh, this is crazy soft. But I'd imagine it just being kind of chill, and then the president and the vice president coming out and really bashing the Fed to cut rates. And also this, I don't know how this is going to impact it with the appeals court allowing them to keep the tariffs in place a little bit longer. Remember, Wall Street thinks that although tariffs haven't showed up in price increases just yet, it will eventually. So I'm interested to see how this appeals court extending, like, pretty much it took that right out of Trump's book. Let's just extend it a little bit, give it a little bit more time. So we'll be watching this and how this impacts interest rates in the longer term. But so far, it looks like that's good in terms of cutting. But we get some more hot data out. We get some Fed members talking. These Trump tariffs don't go well. China doesn't like the tariff proposal we gave to them. So they're like, 10%? Like, y'all just 10%? And y'all do 55 on us? How about 55, 55? And then tariffs, the tariff risk increases again, and then the risk of inflation increases again, and then the risk of them not cutting rates again come back. So it's all just kind of a cycle of all that stuff. But how's the market feel despite all of this stuff going on? Well, today was pretty optimistic and calm, but not too much movement. Not too much movement. So Tesla was slightly positive on the day. Nvidia slightly negative on the day, and then now it's kind of green in the after hours. Microsoft, Meta was kind of down today. Amazon's kind of down today. I'd imagine though, Amazon and Apple are both, like, Amazon's products, most of the stuff sold on Amazon is made in China. So those 55% tariffs aren't good for Amazon. And then price increases on top of that. And then on top of that for Apple, iPhones are made in China. So that's not looking too good. And then on top of that for Apple, the event told us that, hey, like, AI is not gonna, like, it's gonna take a while. So that's not great for Apple. Bitcoin barely moved on the day. NASDAQ 100 barely moved on the day, although it was negative. And gold slightly positive on the day. So a little bit more uncertain. That uncertainty trade is what this is called. What did TLT do? All right, so the safe haven plays kind of did good today. But everything barely moved. I wonder what the VIX looked like. Let's pull up the VIX and put it right here. The measure of volatility in the market. All right. So yeah, that one kind of jumped today. It went down a little bit, but the VIX, I mean, it's near all lows. So let's put it on the one chart for the VIX. All right. And let's just leave it right there and look at that. Look how low we are on the VIX. So what a lot of people believe regarding the stock market is that most of the tariff chaos is behind us, right? And that this taco trade may come back as the tariff availability for Trump comes back into play, because now he could do his little psychological games with the tariffs and issue tariffs, and then they're gone, and then they're back, and then they're reduced, and then they're jacked up. He could do all of that again. And with them thinking that the worst of it's behind us, like, we're probably not going to go back to 145% on China. So that chaos is probably behind us. But at the same time, he could raise and then chicken out again. So this taco trade could be back in. Goldman Sachs notes that their own measure for the US Financial Conditions Index is near lows of the year, which points out easing financial conditions. And think about easing financial conditions in terms of borrowing money. It's getting a little easier. But at the same time, on the other hand, back to this VIX, the VIX is pretty low, adding room for concern in this market's trend. So let's keep the VIX, but let's, right under it, let's add the NASDAQ 100 back. Let's put it on a longer chart. Let's go back to that week chart. Really, we don't even need the week chart. Let's just put it on the day chart, because all I want is the previous high. Look at that. Look at the previous, hold on. Yeah. So we're nowhere. The VIX is still pretty low despite the NASDAQ 100 being near its all-time high. We're within like $8 of it. and some change or a little less. But now tariffs are back on play. Also, the VIX is pretty low, so volatility is super low. And Edward Jones's earnings forecast for the S&P 500 for the next 12 months is the highest it's been on record at $280 a share for collective profits. And do companies live up to these expected earnings with these tariffs being back in play, with still high interest rates? Predictions of an economic slowdown from both World Bank and the OECD for economic growth. I don't know. I don't know what happens, but I don't know. It just looks sketch, don't it? But that's the news we got today, everybody. Hope your day was a blast. Cool. I'll be back tomorrow to cover some more, and if you like hanging out with me, you can always hit that subscribe button. Have a good one.